Hey guys, welcome back. Now, when it comes to investing, there are two sides to the coin. The reward, how much money we can make, and also the risk, which is the potential for loss. And there are many videos talking about how Ethereum can 10x from here, including my own, but rarely do people talk about the risks. And as risk is a critical part of investing, that is what this video is all about. Now, last week I did a video on why I believe Ethereum is one of the best risk-reward opportunities for 2021. And if you haven't seen that video, then definitely check it out here, as in that video I promised I would play devil's advocate and cover all of the biggest risks for Ethereum. Firstly, note that Ethereum is my single biggest crypto holding, so clearly I am a fan. However, as investors, we always need to make sure that we stay objective and understand the risks we are taking on. So in this video, we'll be looking at your personal risk profile, the 5 biggest risks for Ethereum right now, and then we'll finish with some proven risk management strategies. As always, if you do find anything useful in the video, then drop a like, always appreciated. Okay, so as you'll see, there's actually so much I could cover on risk, but hands up, I simply won't be able to in a 10-minute video. But if I can highlight some of the key concepts, show you the biggest risks, and then share some proven risk management strategies, then I will be happy. As you'll see, the first few are specific to Ethereum, and the others could be used on any crypto asset. First up, it all starts with your personal risk profile and where you sit on the risk curve. Ready? Let's do this. This is the risk curve, and it's something that we regularly want to visit, as everything and anything you do with investing will sit on the risk curve. And also, as you go through life and get older, your situation changes and the risk curve is constantly changing and evolving for you. Essentially, it's made up of 2 parts. We have the potential reward of the investment or return on investment, and then how much risk you're prepared to take. And every investment will sit somewhere on this risk curve. As you go further out, you're taking more risk, but you could be getting a bigger potential reward. And this is also different for every single person, as we all have different personal situations. Some people have a high income, a low income. For myself, I now have a brand new first baby coming in 6 months. So that is going to change my investment profile. What is the size of your portfolio? Are you investing a couple of thousands of dollars, 10,000s, hundreds of thousands? This will change how you invest. What is your personal risk tolerance? Are you a risky person, a safe person? What are your objectives? Are you planning to double up and sell within the same year? Or are you a long-term investor? What is your financial knowledge? How well do you know every cryptocurrency? How well do you know Ethereum and how it compares to the competition? And then sprinkle on top, we all have our own opinions and biases that come into the mix. So some basics, let's just cover Bitcoin. So Bitcoin would be classed as one of the safest cryptos. So relatively, you'd be taking only a little bit of risk and getting some potential reward. Now, Ethereum has many more competitors, so you're probably taking more risk. Year on year, it's outperforming Bitcoin again and again. Now, if you were 100% in Ethereum, then you'd be further up the risk curve, or you could diversify with Bitcoin or some other crypto. It may bring your potential reward down, but then you're lowering your risk as well. So basically, everything you do with crypto investing will change where you sit on the risk curve. Now, when it comes to the risks, as you can see in the financial markets, there are many different kinds of risks. So what we'll do here is look at the 5 biggest risks for Ethereum. So when I worked in the corporate world in financial services, I regularly had to take a trip down to the legal and compliance department to assess the risk of any work that I was putting out. And we would always ask the question, is this low risk, medium risk, or high risk? So as we go through these biggest risks, this is a simple method for us to be able to understand the risks we are taking on. This is everything going on that could impact the crypto market. And the biggest one is likely the government. Now, the government probably can't ban a particular crypto, but they could ban an exchange, or they could raise some crazy taxes, or make it really difficult for investors to invest. The question is, will the government ban or block Ethereum? Well, unlike Bitcoin, which does potentially threaten the financial system, Ethereum is just a platform which you build things on. So for me, this meant that the risk was low. The other issue that is probably on the way is regulation. And I know a lot of people don't want regulation to come. However, regulation is important as it means that Ethereum and other cryptos are getting integrated into the system. And I think the day that big regulation gets announced, it is going to be very volatile for the market. I think we could see some big drops, but I also think this will be short term, and I think the market will bounce back. I think ultimately regulation is a good thing, and it means that Ethereum and crypto is getting integrated into the current system, so nothing to fear. For me, this is probably the biggest risk for Ethereum, a competitor coming in and taking its market share. And I would class this as a medium to high risk and Ethereum's #1 threat. We have Cardano, Binance Smart Chain, Solana, just to name a few, all fighting to become the best, most viable smart contract blockchain. And which one will win? Well, ultimately it's too early to say, as they all take a different position on the blockchain trilemma. What is the blockchain trilemma? Take a look. Now, when blockchains first came out, it was highlighted by Vitalik, the co-founder of Ethereum, about this blockchain trilemma and the fact that each blockchain had 3 core elements: scalability, decentralization, and security. And the problem is that you probably could get very strong in 2, but it means you would be quite weak in the 3rd one. So, for example, the first ones were obviously Bitcoin and Ethereum. Now, these are very decentralized as they have thousands of nodes all around the world, which means it's also very secure, but the biggest problem that they had is their scalability. We then have something like the Binance Smart Chain, and this is very secure. It's also extremely scalable, but the problem is it's very centralized, as it's Binance that really controls this. We then have something like Cardano, and Cardano has made a very big step in solving the blockchain trilemma, but the biggest problem with Cardano is that their smart contract platform isn't actually live. But then what's really exciting is that Ethereum 2.0 is also going to be solving this blockchain trilemma. Why I chose to go with Ethereum over other smart blockchain platforms was the first mover advantage, and I put a lot more weight on execution over a good idea. For me, a good product that's in the market right now is better than an excellent product that's sitting in a white paper. But I do think Ethereum's biggest risk and #1 threat is competition. The final 2 risks don't just impact Ethereum, but all crypto assets, but I still think it's worth covering, and that is storage. Where are you going to keep your Ethereum? In a cold wallet? A hard wallet? An exchange? A lending platform? The safest place is obviously a cold storage wallet, but then you can't make money on your Ethereum. And again, it depends on where you sit on the risk curve. You could keep it on an exchange like Coinbase and stake it to earn passive income on it. I personally use the lending platform BlockFi, which is kind of like a crypto bank, and you can earn passive income on your crypto or on your cash via stablecoins. Link in the description if you want to check them out and get some free Bitcoin when signing up. But in BlockFi, your Ethereum is not insured, so it does come with a degree of higher risk, which for me, I felt was a low risk. Number 4 is investor risk. Now, you may or may not be aware that one of the biggest risks to your Ethereum investment is you. 100 years of stock market data and insights has taught us that one of the greatest risks to an investor is himself. And this includes buying at the wrong time, selling at the wrong time, getting caught up in all the fear, uncertainty and doubts, the FUD, getting caught up in the fear of missing out, the FOMO, and all the personal biases that come with being an emotional machine. And last but not least, and number 5 are the unknown risks. And the hardest part about this risk category is the fact that we can't prepare for them, because by definition they are unknown. But it is still worth knowing that they exist, so you have a better chance of spotting one if and when they do start to appear. Okay, so those were the biggest risks. Now the question is, how do we mitigate against the risks? So let me finish up by sharing some proven risk management strategies. And to finish up, here are some proven risk management strategies. And the first one is diversification. And this is why everybody talks about diversification, not putting all your eggs into one basket. If you can diversify into a couple of other cryptocurrencies, this will really reduce your risk, and also diversifying into different asset classes too. And this way, even if crypto were to completely disappear, you don't get wiped out. Next up is the time horizon. The longer the time frame, then the lower your risk. If you're hoping to double your money within a month, then you're taking on a lot of risk, as short term, no one knows where the markets are going to be going. But if you can lengthen your time horizon over a year, this will reduce your risk. Also, this is why people say only play with money that you don't need. So if you don't need the money in the short term, you're less likely to sell when the market crashes down, and this reduces your risk. Next up is don't use leverage. And for the vast majority of people, this is sound advice. It's a little bit like going to a gun range. For the vast majority of beginners, a pistol is going to be fine. What you don't want to do is hand someone a rocket launcher. Now, there are 1% of professionals where this is fine, but for the vast majority of people, don't use leverage. Next up is the risk curve. Now, the vast majority of new investors don't even know the risk curve exists. So by knowing about it, by studying and knowing where you sit on the risk curve, you will know whether you're taking an acceptable amount of risk or not. And ultimately, it all comes down to, do you know and can you accept the level of risk you are taking? As mentioned, risk is a huge category, and I could spend an hour on any of these items that we've covered. And when in doubt, to avoid analysis paralysis, stick to the basics. Here are some helpful questions. Do you know the biggest risks to this investment? Have you protected the downside? Are you using proven risk management strategies? Do you know where you sit on the risk curve? And are you taking an acceptable level of risk? As previously mentioned, I still think Ethereum is one of the best risk-return opportunities for 2021, and if you haven't seen that video, I'll also link it below. For now, I hope you managed to pull at least 1 or 2 helpful pointers from this video. Just to say then, if you did find anything useful in the video, be sure to drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Having been using BlockFi for over a month now, next week I will do an updated review to show you all the pros and cons. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.